You have $200 in your account, maybe 400, sometimes 600 before the rent goes out. You are not broke. Broke would almost be cleaner. You are something in between. Too much to qualify for help, not enough for the system to treat you like a person. It has always known where you are. Your account is negative, maybe by $4, maybe by $400. The number almost doesn't matter, because the mechanism that responds doesn't scale with severity, it simply activates. Overdraft fee hits within hours. $35. 3 charges processed while you're negative. That's $105 in fees, on top of whatever hole you're already in. The math is almost elegant in how precisely it punishes the wrong person. If you had money, you wouldn't be overdrawn. But because you don't, you now have less of it. You try the card at the gas station. It declines. There's a line behind you. You're doing arithmetic you can't finish fast enough. Banks collected over $7 billion in overdraft fees in a single recent year. The same people paying repeatedly for the privilege of being poor in a system that charges for it. The system knows only one thing about you. Your balance is negative. Everything else follows from that. You are not a customer at this level. You are a cost the bank is trying to recover. You've pulled the account back from negative. You have $200, sometimes $400, occasionally $600 before rent drops it again. You are in the category of accounts the bank services but does not particularly value. The monthly maintenance fee arrives, $12 or $15 automatically withdrawn because your balance didn't meet the minimum. The minimum is $1,500. If you had $1,500 untouched, the fee would vanish, but because you don't, it stays. You are paying for the account that is supposed to be holding your money. You're earning 0.01% on your savings. The bank is lending your deposits out at 7% to even 24%. You apply for a credit card. You get a secured card. You deposit money as a collateral so the bank can lend it back to you and charge you interest. This is legal. This is normal. The service you receive is not hostile. It's indifferent. You are a number at this level, a small one, and the bank's interest in small numbers is purely automated. Something changes, not dramatically. Your direct deposit is now $3,200 a month, every 2 weeks without fail. The bank notices, not with a phone call, not with congratulations. It notices algorithmically. Your pattern shifts from irregular and low to consistent and moderate. The system moves you into a different behavior category. Credit card offers arrive. Not the secured card. Actual credit cards. $2,000 limits. $3,500 limits. Rates still 22 to 26%. But the door is open. You apply for a $5,000 loan. Approved in 48 hours at 11%. For the first time, the bank functioned the way banks are supposed to function in the stories people tell about banks. The monthly fee disappears. Your direct deposit triggers a waiver. You're a customer now. Recognized. Serviceable. You matter to them in the way a customer matters to a business, which is to say, you matter as long as you're spending. And you'd be replaced without ceremony if you left. You have been consistent, not lucky, not dramatic, just consistent. Savings, $18,000. Investments, $22,000. The credit card gets paid off monthly, so the 26% rate is irrelevant because you never carry a balance. Credit limit increases happen without you asking. $4,000 becomes $9,500, then $14,000. The bank is extending more rope because your history shows you don't need it. The loan rate on your next car is 6.8%, not 11%. Not because they like you more as a person, because your profile shifted the risk calculation to your favor. This is how wealth compounds through banking before the wealth is even large. Better rates mean you pay less for the same things. Paying less means more capital stays in your hands. More capital builds faster than less. The system is beginning to tilt. Not towards you, exactly, but less against you than before. Your combined assets are north of $150,000. You are not rich by the standard of what comes later, but you are in the top tier of what most retail banks see daily, and the treatment reflects it. The phone line is different. Priority queue. The person who answers has authority to waive fees, make exceptions, approve things without escalating. A dedicated banker is sometimes assigned, a named contact who emails you directly. It sounds like a relationship, and in some ways it is, though it exists within a commercial frame. They are attentive because their performance is measured on retaining accounts like yours. Understanding that doesn't make it less useful. Pre-approved products arrive. Premium cards with real rewards instead of 1% cashback. You are a preferred client now. Named, known. Flagged in the system as someone worth protecting. Above 1 million, the bank stops being a place you visit. It becomes a service that comes to you. Wealth management is offered, financial planning, investment advisory, tax coordination, estate guidance, wrapped into a single relationship. Some advisors are exceptional. Some are expensive salespeople with good suits. You learn to tell the difference quickly, because the difference costs money. The conversations change texture. You are no longer being sold products. You are being consulted. When something goes wrong, it is resolved in the same conversation. No callbacks, no scripts. Someone with actual authority in real time. You are an asset to the bank now, not a customer, an asset. The distance between this and level 2 is not a matter of better service. It's a different institution operating inside the same building. Private banking is a different product for wealth management, in the same way a charter flight is a different product from first class. They both get you there. The experience is not comparable. At this level, you do not have a banker, you have a private banker. This person manages fewer than 20 relationships. They know your children's names, they know what you're building and what you're protecting. The deals are bespoke. The interest rate on a loan is negotiated, not published. Investment minimums are waived. A transaction that takes a retail customer 2 weeks is handled in 48 hours. The rules become flexible, not because the laws are different, because the bank's internal policies have discretion built in. And that discretion is exercised in favor of relationships worth preserving. Fees are waived before you ask. Exceptions approved before they are requested. The system that was automated and indifferent to level 1 is now human, attentive, and oriented towards yes. You are not a client at this level. You are a relationship. And losing you would matter to the people whose careers depend on not losing you. That is a different kind of power than anything else in this video.